Build generational wealth one penny, one dime, $1 at a time. You are joining the personal finance group where we talk stocks, bonds, IRA, life insurance, whole life, term life insurance, many more. We have challenges that take place every week. You can join one for free. Today, we are talking about stocks. Each week, we have a new lesson to help you retire early so you can relax and enjoy your MONEY from working hard. Stocks. Why do people buy stocks? Well, they buy stocks so that they can retire a millionaire. That's it. When you buy stock in a company, you are a owner of the business and you get to enjoy the profits. And as you can see, your money makes money and the value keeps going up. So $1 becomes two, $3, and etc. When you buy stocks, you are a business owner. Look at these business people. They're happy, they're smiling because they own a business and their business is making MONEY over to the right. That is you counting your cash money because you decided to buy stocks. Now, what is a stock? Well, I'm glad you asked. A stock is a ownership equity in a company. You are a business partner and you own part of the business. You own 1%, 2%, 5%, but you own a fraction of the business, which means that when you go to buy a stock, you're buying a share, which entitles you as the owner to a proportion of the profits and the assets. You can buy stocks from your company. Most of the time, people have a 401k plan in which their employer will buy the S&P 500 large cap stocks on their behalf. They might have a target date fund. You can buy stocks from Fidelity, Schwab, M1 Finance, Robinhood, multiple places where you can buy stocks. Now, how do you retire a millionaire? Here is how you retire a millionaire. All you have to do at age 30, that's right, age 30, invest $100 per week till age 65 for 35 years, and you will have $827,000. And you would have contributed a total of $168,000. Hey, that's good. You put in $168,000 and now you have $827,000. How did that happen? It happened because of something called compound interest. This is why Warren Buffett is a billionaire because he understands how compound interest works. I will talk about the rule of 72 in lesson 4. So stay tuned. We're on lesson 1 right now. We're going to take it step by step so that you can become personally financially savvy. If you wait until age 40 and you're planning on retiring at age 65, according to the chart, you have to invest $250 per week for 25 years, and then you'll have $877,000, but you would have contributed a total of $300,000. Yes, that is more money that you have to contribute, but you waited 10 years later to start investing. This is why they say the early bird gets the worm. Now, if you wait until age 50 and you want to retire at age 65 with about 800K, you're going to have to invest $625 per week. That's a lot of money. Now, let's go back. If you're age 30, invest $125 per week for 35 years and you will become a millionaire. You will be nicely retired, enjoying life. Don't forget, welcome to the community. Hit the subscribe button, share the master class. That's right. You can join for free right now for the next few days. You can join the master class where we teach all things money, personal finance, ask your questions. Thank you. And make sure you join the community. Hit the subscribe button. Talk to you next week for lesson number 2.